Star Daily with Phil C.
Pound dollar, yeah, pound dollar. Just wanted to update, not a long video today. Just wanted to update you really quickly on what's going on, and then I'll get back to putting together everything that I'm doing for Saturday. So pound dollar, the Gartley one that I was involved in, we did get stopped out of that. Aussie dollar trend continuation trade, we did hit targets. The Kiwi yen trend continuation trade. Kiwi yen on the 1 hour time frame, we had a trend continuation trade opportunity here. It may surprise you that I don't win 80% of the time, 90% of the time on these trades. I don't have 100% win ratio on these trades. So it may surprise some of you that that is the case. Now the strategy, the trend continuation trade strategy here has about 50 to 55% win percentage, right? And as you trade this throughout the entire year with the 50% win percentage, this works in your favor. Why is that? Well, look at the risk to reward, okay? So at target one, you've got a 1-to-1 risk to reward, okay, for target one. And then on target two, you're looking for an extra move, an extended move at the 127 Fibonacci extension, okay? So this is your target one, and this is your target two, yes? Now, if you have a 50% win percentage on this trade, and you traded this strategy every single day throughout the entire year, then it would stand to reason, mathematically, that this is a winning system. Therefore, every day I come in and I trade it consistently, day in and day out. It's important to do that with daily disciplines practiced daily. So that's why I do this. Now, what you find when you have this kind of setup is this gives you a positive expectancy. Now, a positive expectancy is a mathematical equation that gives you that. Positive expectancy is a mathematical proven probability that over time you gain more than you lose, right? That's what it is. And ultimately that means that you have an edge in the markets. So no matter what you're trading in the markets, always make sure that you have an edge. Because if you don't, eventually over time, you're just guessing half the time, and you're throwing money away. And I don't want that for you. That's why it's so important that I share this with you all the time. And to test, one of the ways to find out that you have a positive expectancy is to test. So we came down and we hit our stop here. So again, I only win half the time on these. And most of the time, target twos end up playing out. That means that throughout the end of the year, we are making money. And that means we're a consistently profitable trader. All right. That's what that means. So that's the update on Kiwi yen 1 hour time frame. The only thing that I want to cover today, is the trend continuation trade that we had on the Aussie. So this is Aussie dollar 1 hour time frame. We all knew that, and you can check in the previous video. We all knew that I was short around this level. Okay. And then we came down here and I mentioned that we weren't going to get too greedy with it. And then we hit target one. We had a little bit of a move, relief rally right there. And then we eventually came down all the way into our 127 Fibonacci extension right there. Okay. So we hit target one. and then we came down and hit target 2, and then we just continue to drop right now on the Aussie dollar. So that was 1 hour time frame. This was a trend continuation trade. Same with the euro dollar, 4 hour time frame here. We came down, we hit target 1, we came back up, we had we rolled stops to break even, and now we came down and hit target 2 at the 127. So we're doing really well, which is really, really good. The only trade that I want to show today, which has already hit targets, is yet another, I know, right? Another trend continuation trade. So we came down, then we had a little bit of a move, then we come back down, and then we had another move all the way up, back up into, look left, this structure level right here. So we got a shelf, okay? Previous support now becomes new resistance. With the trend continuation trade, we want to sell, right? This is our sell zone. This is our sell zone right here. So as price action came up, actually got involved here, as you can see, at the 618. As price action came up into this level, previous support becomes new resistance. With a trend continuation trade, we want to sell at the structure. And that's what we did. We sold at the new resistance, okay, giving us a really good risk to reward. Stops are at the 113. Targets are a retest of the lows down here. And that gave us about 20 pips, to be fair, on target 1. And we'll see, might get stopped out for break even on here. But we'll see if price action has any more movement towards the downside. So we came down, hit target 1. As we do that, we take off half of the position, okay? Roll stops to break even, and now we're looking for a continued move all the way down into the 127. Fibonacci extension there. Yeah, so again, not a long video today. I just wanted to update you on some trades. And we are trading extremely well. All we need to do now is to survive until Wednesday next week. Why? Because that's the end of the month. And towards the end of the month, or at the end of each month, we want to end in the green. That is the goal, anyway. But that's it. Until tomorrow, be safe, enjoy life, and I'll talk to you soon. And thank you so much, as always, for watching.